Hi there, back again with me Rati in Mami Beluga Investing. Today's video is still part of the STI series, which I discuss the stock that part of Singapore Straits Times Index. Today, I'll be discussing Singapore Exchange Limited or SGX with stock symbol S68. In short, my conclusion about SGX are: first, the company has a really generous dividend distribution. 2. Solid performance over the last 10 years. 3. The share have not been cheap for the last 10 years. How did I come up with that conclusion? Follow up my analysis till the end of this video. Okay, a little disclaimer, this is an amateur video. My main intention is to record my journey learning and practicing investing from scratch. This video shall not replace any financial advice and neither suggestion to take up position, buy or sell in the stock market. Please conduct your own research before making any decision. And finally, feel free to put your comments, criticism, and suggestions in the comment section below. Okay, now let's talk about SGX, Singapore Exchange Limited. This company is an investment holding company located in Singapore and provides different services related to securities and derivatives trading and others. SGX is a member of the World Federation of Exchanges and the Asian and Oceanian Stock Exchanges Federation. Singapore Exchange Limited was founded on the 1st December 1999, 21 years ago. Over the years, it has been growing through aggressive acquisition and product development. In March 2007, SGX bought 5% stake of Bombay Stock Exchange for $42.7 million. And then on the 31st of January 2008, SGX acquired a 20% stake in Philippine Dealing System Holding Corp, which has become an associated company of SGX. And then, the beginning of 2008, SGX reached an agreement to buy at least 95% of Singapore Commodity Exchange. Then on the 30th of June in the same year, SGX completed the acquisition of Singapore Commodity Exchange Limited or SICOM, which now is a 100% subsidiary. Then in November 2016, the Singapore Exchange or SGX acquired the Baltic Exchange, headquartered in London. The latest product from SGX that caught my attention is that it is in September 2020, it announced SGX Index Edge to launch crypto indices in collaboration with Crypto Compare. In terms of ownership, SGX seems to be indirectly owned by the Singapore government via SEL Holdings Private Limited. SEL Holdings Private Limited hold 23.66 SGX shares. SEL Holdings, a special purpose holding company that wholly owned by Temasek Holding Private Limited, an investment company, while Temasek Holding itself is owned by the government of Singapore. Okay, so that was a brief profile of SGX. Now let's take a look at its performance over the years. So here I plotted SGX historical earnings per share for the last 20 years. The earnings are plotted as thick circular markers connected with thick red lines. I've also placed a green dashed line to indicate the zero earnings. Earning below the green dashed line indicates that the company was recording a loss for that financial year. There are several things that I look in the earning history. First, whether a company's earning is stable, growing, or dwindling. And then second, how the crisis have affected the company's earning. Okay, at a glance, SGX have never recorded a loss for the last 20 years. Okay, but there is one notable dip and notable spike in the earning. One dip happened in 2003. Since then, SGX earnings have been increased till the record high at 2007. It could be due to one-time event. There's a sharp drop in 2008, which externally coincided with the US subprime mortgage crisis. SGX earnings then grew at a more moderate pace since 2009 till 2020. COVID-19 pandemic does seem to affect SGX earnings. Considering all that, I would classify SGX as a growth company, even though moderately. I would like to put a note that the last data points, which is earning in 2021, is only account for the first half of 2021. So this dip in 2021 is not real. Okay, now we know that the SGX performance. Now let's see how much of those earnings were distributed to the shareholders as dividends. So here I plotted the accumulated dividends payout in a year for the last 11 years, superimposed on top of the earnings. The accumulated dividends are plotted with red circular markers connected with thick red lines. Each markers are annotated with two numbers, above and below the markers. Number above the markers annotated the total dollar amount of dividend that year, while the number below the marker is the dividend payout ratio. At a glance, we can see that SGX is really generous in their dividends distribution. It's always above 80% of the earnings, in some cases even too generous. In 2012 and 2017, it distributed more than 100% of their earnings as dividend. Probably SGX has too much cash from the previous retained earning. Normally, I would pretty nervous if a company is too generous in their dividend distributions. I prefer the company to retain some of their earnings as a cushion for rainy days or prolonged crisis. That way it can retain its talents during difficult times. Alright, we have seen how generous SGX with its dividend distribution. Okay, the next question would be, is the company's stock price still reasonable? To evaluate the reasonable price, here I plot 4 layers of information which may help me to judge whether the share price of the company is cheap enough or too expensive with respect to their fundamental valuation, specifically earnings. The 4 layers of information are: the first one is the price movement, which is the most publicly accessible information. There are a few notable spikes and dips. The first one is towards the end of 2007 and then 2011 and early 2020. The 2007 spikes might be related to Tokyo Stock Exchange acquisition. In that period, Tokyo Stock Exchange purchased an aggregate of around 53 million shares, which approximately 4.99% of the total issued share capital of SGX. Such a big block of purchase for sure drives stock price skywards. There are also some notable dips. There are between 2008, 2009 and COVID-related dip in early 2020. The second layer of information is 10 times earning multiply. The third layer of information is 15 times earning multiply. Then the fourth layer of information is 20 times earnings multiply. Okay, we could already see that SGX price seems to move ahead of its earnings, sometimes much faster than its earnings. At a quick glance, SGX stock price has never been cheap for the past 20 years. Normally, I would consider the stock price to be cheap if it's below the 10 earnings multiply, in this case below the dashed green line on the screen. However, SGX share price are hardly below that line, not even below that 15 earning multiply. Okay, for the last 3 years have been constantly above 20 times or 20 earning multiply. Alright, this is the end of the video. My conclusion for SGX are: 1. The company has a really generous dividend distribution. 2. It has a solid performance over the last 10 years or even longer, 20 years. 3. The share price has never been cheap for the last 20 years. Okay, so that's all my video for SGX. I hope my analysis is useful and I'll see you in the next video. Bye bye.